We're going to be taking a look at the 2020 Sole Trader final account now. And this was the paper that was sat in November of the year because the exams in the summer were called off due to COVID. So Sole Trader came up that year. So again, we've got 5 steps. Step number 1, we lay out our accounts, and that should take us 5 or 6 minutes. Step 2 is we transfer the figures from the accounts into the trial balance. That'll take 6 or 7 minutes. Step 3, we'll calculate investment income and debenture interest for the year, and that'll take 3 or 4 minutes. So I'm going to rush through this year's steps 1, 2 and 3 because you have that in the steps 1, 2 and 3 video. So I'm just going to fly through that. If at any point though you want to stop and practice it, just pause the video and then see how you got on afterwards. Step 4, then you complete your adjustments, which should take you approximately 32 minutes, and then step 5, you tot up your totals. Okay, so that's what it probably would look like at the end. Now that's a company account, but that is what it would look like at the end. So you can see all the workings kind of done here. There's no need for workings pages and stuff like that, so that is more than enough. Okay, so getting started then, step 1, your layout looks like that. Step 2, you transfer your figures into your accounts from the trial balance. So if you want to pause the video and have a look at the trial balance and put in the figures, and then come back when you're finished and have a look at what they should look like. So that should take about 6 or 7 minutes. So this is where everything would go. And then this is how it would look in the accounts. And that is step 2. Okay, so you've earned tons and tons and tons of marks already at this stage. So then we move on to step 3, which is calculate the investment income and debenture interest for the year, and that should take you 3 or 4 minutes. So if you want to pause the video again and see how you get on calculating the investment income and the debenture interest and see if you get it right. So just to remind you, investments themselves go into the balance sheet. The amount of income we receive for the year should go into the TPL there. And then any investment income that we have not received at the end of the year will go here in the current asset. So anything we have not received. Then with our mortgages, our liability mortgage goes here in the finance by. The mortgage interest for the year will go in the TPL. Okay, and then any amount that we have not yet paid will go in mortgage interest due there. So here's the 2020 figures. All right, so the investment income is 7,500 and the mortgage interest for the year 22,800, and they will go into the TPL here. Now I only haven't put this over here and minus it because sometimes in Sole Trader questions the Sole Trader will live in part of the building and that will be drawings, so I'll just leave that there for now. And then you're going to have investment income due at the end of the year, so it'll be the 7,500 for the year minus what you've received. So you've received 2,500 in that question already from the trial balance, and then you've got mortgage interest due, so you've got your 22,800 for the year minus what it says that you paid in the trial balance. So that's what your accounts will look like after steps 1, 2 and 3. Now you're going to go and do the adjustments, so 32 minutes to do these. So you've got 9 adjustments here. And this was the first time that a bank adjustment came up in a Sole Trader final account. So that was interesting there. Okay, note 1. Stock at cost on the 31st of the 12th, 2019 was 69,800. This figure includes water damage stock, which cost 10,600, but which now has a net realisable value of 15% of cost. Okay, so here we go, less closing stock. So you've got your 69,800 minus your 10,600 plus 1,590, and then your closing stock will also go over in the current asset. So just whatever the same figure is as you have your final figure here when you're finished everything. If you put that down there, even if you don't get it right, you're more than likely going to get marks for it. Okay, note 2. No record has been made in the books for goods in transit on the 31st of the 12th, 2019. The invoice for these goods was received showing a recommended retail selling price of 24,500, which is cost plus 25. Okay, So you've got goods in transit in a car, in a van, delivery van somewhere, okay, on their way to you. How do we know they're to you? Because the invoice was received, okay? So the invoice was received. So you bought goods on credit from a creditor, and it's at the end of the year. Okay, so the recommended retail selling price of those goods is 24,500, which is cost plus 25%. So we need to find out what cost price is. So 24,500 divided by 125 multiplied by 100 is 19,600 euro there, which we add to purchases and we will add to creditors. And we'll also add it to closing stock because it is at the end of the year. Okay, and then obviously that will have an impact on the closing stock there, but you'll just put the figure in here, whatever your final figure is here. Okay, note 3. So the long delivery vans one. So provide for depreciation on delivery vans at the annual rate of 20% per annum on cost from the date of purchase to the date of sale. Note, on the 31st of the 3rd, 2019, a delivery van which had cost €48,000 on the 31st of the 10th, 2016 was traded in against a new van which cost €64,000. An allowance of €26,000 was given on the old van. The cheque for the net amount of this transaction was entered in the bank account but was incorrectly treated as a purchase of trading stock. These were the only entries made in the books in respect of this transaction. Okay, so a few things to do here, and always worth going over the delivery vans video and the notes there to just reinforce it all the time. So let's take a look. So we'll fix the purchases first. So from reading this, okay, the cheque that the sole trader gave to the car dealership to get the new van, okay, was incorrectly treated as purchase of trading stock. So we need to take it out of purchases. We need to fix it. We need to take it out, right? So how much was the cheque? Well, the new van was €64,000 and we got an allowance of €26,000 on it, okay? So therefore, whatever the difference is, was the cheque and it was treated incorrectly as purchases, and that is €38,000 there. Okay, so that's our purchases there. Then we have to do our new cost of van. So what we do from the cost here, this 250 came from our trial balance. The 250, we minus the 48,000, which is the old van, the cost on the old van, and we add the cost of the new van, which is 64. So altogether there, that has a cost of €266,000 there. Next, we'll do the depreciation on delivery vans for the year. So it says here, provide for depreciation on delivery vans at the annual rate of 20% per annum on cost from the date of purchase to the date of sale. So the trade-in happened after the 3rd month. So we had 250,000 by 20% by 3 over 12 months, and that's 12,500. And then after the 3rd month, the cost of our vans was 266, which was when we sold the old and then we bought the new. So 266 by 20% by 9 over 12, and that's 39,900. So that's €52,400 altogether there. Next, we'll work out the profit or loss on the sale of the old van. So again, our formula is cost minus the accumulated depreciation on the old van. That's equal to the net book value. We'll compare that to the allowance, and that tells us whether we made a profit or loss on sale of the van. So the old van was €48,000, okay, and we need to figure out how long did we have it for so we can find out the depreciation, the accumulated depreciation on the old van. So we have €48,000 multiplied by 20% multiplied by the amount of time we had it for. So if we look here, we bought it on the 31st of the 10th, 2016, and we sold it on the 31st of the 3rd, 2019. So 2016, we had it for the entire 10th month. So we didn't have it. We only bought it at the end of the 10th month. So we only had it for the 11th and the 12th. So that's 2 months of 2016, 12 months of 2017, 12 months of 2018, and then 3 months of 2019. So altogether, that is 29 months. So 48,000 by 20% by 29 over 12 months is €23,200 there. So that gives us a net book value of €24,800. So that's how much it was worth at the time of sale. So we'll compare it then to the allowance. So there was an allowance of 26,000. So unfortunately, it was only worth, unfortunately, the for the car dealership, they paid more for it than what we actually valued it at. So we made, or Highland made 1,200 profit. So here at operating income, we will put the profit on sale of delivery van 1,200 there. Then the last thing that we have to do is work out the accumulated depreciation on these 266 vans at the end of the year. So how do we do that? Well, from our 64,000 that we got in the trial balance, okay, we take away the 23,200, which is the accumulated depreciation on the old van. Okay, we no longer own the van, so we have to take away the accumulated depreciation for it. And then what we'll do is we'll add the depreciation for the year. Okay, so we'll add the depreciation charge for this year, 52,400. So the accumulated depreciation altogether there, 93,200. And then net book value, €172,800. And so that's the delivery van adjustment done. Note 4 then. A new warehouse was purchased during the year for €90,000 plus VAT, 13.5%. This amount paid to the vendor was entered in the land and buildings account. No entry was made in the VAT account. Okay, so what should happen when a new warehouse was purchased? So 90 plus VAT. What should happen is that the buildings account should be debited by 90, and then the VAT account should be debited by 12,150, because that is 13.5% of 90,000. So that's what should have happened. But the amount paid to the vendor, so Sherry Fitz or whoever was selling it, was entered in the land and buildings account. Okay, so the amount paid to the vendor, whoever was selling it, whatever, was entered in the land and buildings. So 102,150 entered into the buildings, nothing went into the VAT whatsoever. So to fix that then, we need to take 12,150 out of the buildings, so we'll credit that in the buildings account, and then the VAT, we need to enter the VAT on the debit side. So looking at the VAT first then, our VAT here is on the credit side. So the VAT, this 3100 from the trial balance is on the credit side there. So if we have 12,150 on the debit side, that's going to completely, turn that liability VAT into an asset. So our VAT, 3,100 on the credit side, minus 12,150, there we go, that is the VAT there. And then land and buildings will minus 12,150 euro from them. And then that's that adjustment done. Then we have note 5, still we're looking at buildings. So buildings are to be depreciated at the rate of 2% per annum on cost, and land at cost was €500. It was decided to revalue the land and buildings at 900,000 on the 31st of the 12th, 2019. Okay, so our land and buildings, we have to remember that we have a new cost there. So it's not 975, it's 975 minus 12,150. So we go to admin expenses and we'll have our buildings depreciation. We'll have our 975 minus our 12,150, and we're going to minus the land here because we do not depreciate land. Okay, and then we multiply that by 2%. So we get €5,657, which we will add then to the accumulated depreciation up here. Now, however, it did say then to us that the land and buildings was going to be depreciated at the end of the year to 900,000. So your cost here is going to be 900,000. You'll have nothing in the accumulated depreciation, and you'll have 900,000 in the net book value here. When we revalue land and buildings, you are going to create a revaluation reserve. Now, I've got 3 figures here. So what on earth are these 3 figures? So the 117,150 is the difference between the new value, 900,000, and the actual cost, the 975 minus 12,150, and that is 117,150. Then you add the 25,000 accumulated depreciation that had been in the trial balance, and then you add the depreciation charge for the year. So altogether there, that is 147,807, and that is that. Okay, so that is the revaluation reserve and the depreciation charge. Note 6 then. The suspense figure arises as a result of the incorrect figure for mortgage interest, although the correct entry had been entered in the bank account and a VAT payment of 3,700 entered only in the bank account. Okay, so what do we do here? Alright, so the suspense figure arises as a result of the incorrect figure for mortgage interest, although the correct entry had been made in the bank account. Okay, so here's my mortgage here. It's saying to me that mortgage interest paid for the first 3 months is 8,400. So what we want to do, we want to work out how much it was for the first 3 months, because this is incorrect here. So we will work it out. The mortgage interest was, for the first 3 months of the year, they only had a mortgage of €240,000. So €240,000 multiplied by 8% multiplied by 3 over 12 is 4,800. So how do we make 8,400 into 4,800? We'll have to minus 3,600 from that. Now, as you know, that will mean our two sides will not equal. If I've minus 3,600 from the debit side, I'm down 3,600 on the debit side. So I'm going to have to add 3,600 to the 381. Okay, 381,750 to make that equal. And then we have a VAT payment of 3,700 entered only in the bank account. So we have paid VAT. We have made a payment of VAT to the revenue commissioners. Okay, and it was entered in the bank account, it just wasn't entered in the VAT account. So what will we do here? So the VAT here, 3,100, okay, we have made a payment of VAT in the to the revenue commissioners, right? This 3,100 VAT on the credit side means it's a liability. They owe the revenue commissioners that 3,100. So if we paid them 3,700, it means that we have to minus the 3,700 from that liability. And again, that'll bring the VAT over to being an asset there. Now, then we have 3,700 less on the credit side. So we need to make sure then our sides will equal. So we'll have to put 3,700 on the debit side to make them equal. And that is us there. So that's that. We'll transfer it into the accounts then. So again, your VAT, we're minusing 3,700 from this. So it's up here and we'll minus the 3,700 from that 3,100 credit side. Okay, so that'll be a positive asset there. Then your salaries and general expenses, we're going to plus 3,600 and we're going to minus 3,700. And then the mortgage interest, we're actually going to take away what it actually should have been. So the mortgage interest paid actually was 4,800. So we're taking that away from the 8,400 there. So that is that. Okay, so we've got the big bank adjustment now. So the first time that this ever appeared in a sole trader final account. So the figure for bank in the trial balance has been taken from the business bank account. However, a bank statement dated 31st the 12th, 2019 has arrived showing an overdraft of €32,000. A comparison of the bank account and the bank statement has revealed the following discrepancies. Number 1. A credit transfer for €1,000 had been received on the 31st the 12th, 2019 in respect of a debt of 1,500 previously written off as bad. The debtor has agreed to pay the remainder within 2 months. No entry was made in the books to record this transaction. Note 2. A cheque for 16,500 issued to a supplier had been entered in the books, the cash book and ledger, as 15,600. Number 3. A cheque for 2,500 issued to a supplier had been returned. This had not been entered in the books. And number 4. A cheque for advertising 14,200 has not been presented for payment. Okay, so the bookkeeper knows things that AIB Bank doesn't know about, and AIB Bank knows things that the bookkeeper doesn't know about. So they've both got different figures. The bookkeeper's bank figure has come from the trial balance on the credit side, so that means that's an overdraft. And AIB's bank figure has come from their bank statement and is 32,000 overdraft. Right, so number 1. A credit transfer for 1,000 had been received on the 31st of 12th, 2019 in respect of a debt of 1,500 previously written off as bad. The debtor has agreed to pay the remainder within 2 months. No entry was made in the books to record this transaction. Okay, so a credit transfer was paid directly into the bank. So AIB would know about that. AIB will do nothing then about that. Okay, they've already got that entered into their accounts. Now the bookkeeper will need to show in her bank account then that €1,000 came into the bank. So if €1,000 came into the bank, that would reduce the bookkeeper's overall overdraft figure by €1,000. Now, what other accounts are affected? So the debtor has agreed to pay the remainder within 2 months. So what is the remainder? The remainder is €500. So we're going to add €500 to the debtor, and then the bad debts recovered, we are going to put the entire amount, 1,500, into the bad debts recovered, and that will go into the TPL in add operating income, and that's that. Okay, the next one. A cheque for 16,500 issued to a supplier had been entered in the books, the cash book and ledger, as €15,600. Okay, so that is a mistake that the bookkeeper has made. Okay, so the bookkeeper has made this mistake here. So the bank needs to do nothing, AIB needs to do nothing, okay? But let's look at what the bookkeeper should have done. A cheque for 16,500 issued to a supplier. So 15,600 should have come out of the bank, and the creditor should have been reduced by 16,500. So that's that. What happened by mistake was that 15,600 was recorded coming out of the bank instead, and 15,600 was taken out of the creditor's account. So what we need to do to fix it then, we need to put 900 on the credit side of the bank, which is going to increase that overdraft, and we need to minus 900 from the creditor account. So that's how that will look. Number 3, a cheque for 2,500 issued to a supplier had been returned. This had not been entered in the books. Okay, so 2,500 issued to a supplier had been returned. It wasn't entered in the books, but the bank would know about that, okay? Or else it was returned. It could have been through the post. It doesn't really specify what actually happened here. So it had been returned, could have been returned by the bank. So maybe there was a mistake by the bank or something like that, or a mistake by the bookkeeper when she was writing the cheque. Maybe she didn't sign it, maybe she didn't date it. Whatever the reason, anyway, a cheque came back into the business that had been sent out for a creditor. So when the cheque went out, the bank was credited and the creditor was debited. So the creditor reduced and the bank also reduced. But now we have to show that the debt to the creditor has increased again and that the bank account has increased on the debit side. So that means that the overdraft has reduced by 2,500, okay, and the creditor has increased by 2,500. Okay, and then number 4, a cheque for advertising 14,200 has not been presented for payment. So that just means that the bookkeeper gave a cheque to an advertising agent, okay, whatever, and they just put the cheque into their back pocket and they just haven't cashed it yet. All right, so that's literally all that happened there. So we just need to get the the bookkeeper knew about that. They didn't not put anything into their accounts, whatever, but we just need to get the bank figure after this advertising company would go in and cash the cheque. So if an advertising agency went in and cashed this cheque of 14,200, that would increase the overdraft by 14,200. And overall then you will have €46,200 overdraft. Okay, so both of these figures need to equal. If they don't, you know you've made a mistake somewhere. So check all your minuses, check your pluses, check you did it in the right bank account, and then that's it. Okay, so let's see how this looks in the books then. So your bank, you're going to minus 1,000, you're going to plus 900, and you're going to minus 2,500 from the 48,800 bookkeeper figure. You're going to add 500 to debtors, and you're going to put the bad debts recovered, 1,500, into add operating income. And then your creditors, you are going to minus 900 and you're going to plus 2,500. And that's how the bank figure will look then at the end of it. Okay, note 8 then. Provide for both investment income due and mortgage interest due. Note, 20% of mortgage interest for the year is to be attributed to the private section of the building. Okay, so investment income due, we have 7,500 for the year, which came from here, minus the 2,500 that was received from the trial balance. If you have a look at the trial balance, it'll tell you there. So you've got €5,000 investment income due at the end of the year. And then you have your mortgage interest for the year, 22,800 minus the 3,700 that was actually paid, and that is €19,100 there. Now, note, 20% of the mortgage interest for the year is to be attributed to the private section of the building. So 22,800 by 80% is €18,240 here. And then you're going to put the 20% into drawing. So the 22,800 by 20% is 4,560, and that is that one. Our last adjustment then, provision for bad debts is to be adjusted to 4% of debtors. So provision for bad debts already existed. We had it in the trial balance, and we know it already existed anyway, just from this word here, adjusted. So you know it exists already and you need to adjust it. Okay, so what we do is we have a look at the debtors. So the debtors figure, okay, was 98,000 after our bad debt recovered there. 500 has been added to that. If we multiply that by 4%, then we get 3,920. Now, we know that there was one before because we are adjusting it, right? And this figure 4,500 came from the trial balance. What we need to do is we need to compare 3,920 to the 4,500, and that is a decrease in bad debts provision, okay, €580 there, and that is good news for the business. So it is decreased from 4,500 to 3,920. So that is it. The last thing you have to do, tot up your totals. So that's how your accounts look at the minute. And so you just need to tot everything up, okay? And then that is what it will look like at the end of the day. And then you get your total net assets 1,470,670, and then your capital employed 1,467,670. Please remember to tot up these fixed assets. Sorry, these are a bit out of sync here. Please remember to tot them up because that's very important. You could get a penalty if you don't. So that's the 2020 S Heighway sole trader account completed.